So in this video, I want to share with you 6 powerful business lessons that I learned from studying central banks and the Federal Reserve. These institutions generally make a bunch of money, have a lot of power, or are around for a long time, so it's worth studying and seeing if there's certain business lessons, tactics, and strategies these guys use so that we might be able to apply them in any businesses we have now or businesses we start in the future to help us kind of have a smoother path, get further along, and make more money and just overall have a better business. So with that said, let's dive into it. Lesson number 1 is called "Get in the deal, change the terms later." So when they were starting the Federal Reserve, so this is specifically for the Federal Reserve that was passed in 1913 in the United States. So when they were creating the Federal Reserve, and when they were actually writing it, they were the guy that was writing it, and I'm not sure if it was Paul Warburg. I forget the guy that was writing it. I know Paul Warburg. He had the most knowledge when it came to understanding central banks. So he was the when they were creating when they were writing the what would ultimately be the Federal Reserve Act on Jekyll Island in 1910. He was the one that was most involved in it, but he was writing these things, and he was creating it, and then later on he kind of made these slight modifications, and some of the people were like, "Whoa, what are you doing? This is not what we want." And the guy said, "Listen, we just need to get the bill passed. We need to get the bill passed," and because he understood that once the Federal Reserve Act was passed, he could change some of the things later. He could slowly start to move some of the ideas that were too controversial and would have stopped the Federal Reserve Act from being passed. If he could just kind of get a variation of the Federal Reserve Act passed, then it could be modified later, which is exactly what's happened. The Federal Reserve Act has been modified over 100 times since it was passed into law more than 100 years ago. Grant Cardone does this well, and he talks about this. If you ever hear Grant Cardone negotiate, or he talks about negotiating a deal, or he's negotiating a real estate deal, he just wants to kind of get his foot in the door. So he never says like, "Well, hold on now, I have a problem. The price is too high, and I don't like the 20-year term. I want it to be a 30-year term." He doesn't say any of that. What Grant Cardone generally does in the beginning is he says, "Perfect. The price is great. The terms are great. Everything's great. How do we move forward?" And then once he's moved forward, once he's gone, he started to go through the straight line, as Jordan Belfort talks about in his course, the Straight Line Persuasion course. Once he's kind of further along and everyone's committed, then Grant Cardone might say, "I want to buy this deal. Everything's great, but since I've done my due diligence from market comparison, the price is a little bit too high, and instead of paying $18 million, I'm going to offer $15 million. But he doesn't do that in the beginning. He gets his foot in the door, and a lot of them beginner entrepreneurs actually have this problem. They want everything to be perfect before they start a business, or they want to, if they're negotiating something, maybe a lease, or they're negotiating, something, they want everything to be perfect before they move forward. Just start moving forward. Get the ball rolling, get your foot in the door, and then as you're moving forward, and especially now that you have the person's attention and they're a little bit more committed because you move through the straight line, now it's more, it's more easy to kind of bring up changes or things that you want to change or modify. The second lesson, sometimes your enemy is your friend. They say keep your friends close and your enemies closer. I believe in the 48 laws of power. They talk about the power of using enemies. The creation of the Federal Reserve is a perfect example. There were these big banks, and they were rivalries. They were undercutting each other. They didn't really like each other. They were all fighting for power. They came in together. They joined forces, and it was them that kind of came together that formed the Federal Reserve that actually helped all of them out. And, I don't have access to their finances, but my guess is they're all each making a lot more money now, and they have a lot more power, even if you adjust the money for terms of inflation, and they have a lot more control than they did, before the Fed was created. So sometimes there are times when you can team up with your enemies, when you can team up with your rivals. Lesson number 3, think big. If you think about central banking or, the Federal Reserve or, having a central bank in a country, that's pretty much as big as you can get. These guys think very big. They think massive. They think, all right, how can I control the entire money supply for a nation? That's thinking big. A lot of things that, one of the main problems that some entrepreneurs have, and I still have this to an extent myself, is I think kind of too small, right? We want to be thinking big. We could go back to Grant Cardone's 10x. However much money you think you need to have to live comfortably, 10x that and aim for that goal. And, especially with taxes and inflation, you might actually discover that you need to make more money than you might initially think that you need to make. Number 4, position the deal as a win for the person you're selling it to. When the Federal Reserve Act was passed, it was passed for the common person. It was passed for, listen, this is going to benefit the regular person. It was actually designed to benefit the banks that got together that helped created it. Or it was the people that represented the banks, right? People that represented different banks. It was about 25% of the wealth of the world. The people that represented 25% of the wealth of the world, it was 7 people that got together that created this act, that created the Federal Reserve Act. Now, they did it initially. They did it for themselves, but it was positioned as, this is going to be a win for you. This is going to be a win for the people, because the people need elastic money supply, and it will help reduce bank busts, and it'll make the currency more stable, so it'll be better for the people. It'll be better for the average folk like you. It'll allow you to live a more comfortable life. Now, even though that wasn't necessarily the case, it wasn't the case, that's how it was presented, and that's how it got passed. Now, we could still use that strategy, but we could do who wrote the 7 Habits of Highly Effective People? I forget the guy's name. But one of the things in there, I believe, unless it was in How to Win Friends and Influence People, because sometimes I get those lessons confused, think win-win. How can it be a win for me, and how can it be a win for the client? So if you're trying to sell a client something, or you're working on a business deal, how can I position it in a way where it benefits me, but it's also a win for the other person? And again, this doesn't have to be necessarily manipulation. This could just be a win-win. I was hanging out with my buddy a few weeks ago, and I kind of wanted some soup. And he wanted to go to this place called La Vida. And I didn't really want to go to La Vida, guys. I was just kind of hungry. I just wanted to get some soup. And so I figured I'll go get some soup, and maybe we'll shake hands, and, you'll head home. We hung out for a little bit. Everything was great. And he says, well, La Vida has really good soup. And I paused for a second, and I said, well, gee whiz, La Vida does actually have really good soup. So we ended up going to La Vida, and I got the soup that I wanted, and I forgot why he wanted to go there, but he was able to go there. I think he just wanted to go hang out there for whatever reason, but he positioned the offer where it was a win-win. It was a win for him, but it was also a win for me. The next lesson number 5, is don't let your ego get involved. This is a big one. A lot of people are afraid to put themselves out there and possibly feel rejected. And sometimes in business, that's what you have to do. You have to feel vulnerable, especially in the beginning. If you're starting a business, you're not going to have any reference experiences if it's going to work or not. So you're going to have to feel. You might have to feel a little bit vulnerable. You might have to feel some uncertainty. But most importantly, as you're doing that, make sure your ego doesn't get involved. A lot of people, their ego, their pride stops them from doing deals that are financially beneficial to them. The original Federal Reserve Act was called the Aldrich Plan. It was written in 1910 at the meeting of Jekyll Island, where 7 people, including Senator Aldrich and 6 other people, they got together and they wrote what was first called the Aldrich Plan. And it was presented as the Aldrich Plan, named after Senator Aldrich. And even though he was a senator, he was tied to business, and it was it was denied. I forget if it was a Senate or Congress, but whoever it had to get passed through, they denied it primarily because of the name. Because the name, the Aldrich Plan, was tied to the senator who was kind of involved in business and had ties in business. I think it was even, he was married to one of the daughters of the Kennedys or something. I forget the exact details, but it was very clear that he was involved in business. And just the name, so it wasn't called the Federal Reserve Act, it was called the Aldrich Plan. That was how the bill got rejected. That was one of the main reasons. So then what they did is once it got rejected, they made some slight modifications to the bill. It was pretty much merely cosmetic. They didn't really change too much of the bill, but the big thing they did is they changed the name of it from the Aldrich Plan to the Federal Reserve Act. Makes it seem like it's for the people because it has the word federal in there, right? It sounds all official, the Federal Reserve Act. And then when they represented it, that's when it got passed. And that leads to the next lesson, lesson number 6, which is if you fail once, try again. Whether you're negotiating with a person or you're starting a business, if you fail once, try again. The Aldrich Plan was rejected, but they changed the name on it. They made some slight, pretty much inconsequential modifications, and then they represented it, and it got passed in 1913 as the Federal Reserve Act. This also happened in the first central bank here in the... There's debate if this is considered the first central bank or not. It has all the characteristics of the central bank, but it was from 1781 to 1785. There was a bank in the United States that was chartered to print money. So it basically controlled the money supply. That bank was a big failure. I mean, it was a massive failure. The charter only lasted 4 years, and then it wasn't allowed to be renewed as a central bank. But even though that bank from 1781 to 1785 was a big failure, the person that was a component of that bank, he kept pushing for a central bank. He said he didn't give up. He kept saying we should have one. And a few years later, in 1791, so 6 years later, there was another central bank that was passed. So even if one of the things these guys have that makes them, one of the traits that they have, right? I'm not a big fan of central banks at all, but one of the traits these guys have is even if they fail, they don't give up, right? And even if it takes them years to get another, central bank in, they don't give up. They keep pursuing. They just keep plowing and moving forward. So that's it, guys. These are the 6 business lessons that I learned from central banks and the Federal Reserve. And hopefully you got some value from this video as well.